Good afternoon, everybody, and I hope you had a pleasant lunch. I'm sorry for the delay. There was technical issues here in the conference centre in regards to getting the presentation through, but we're now up and running. I'll give you a quick run through today on Moneta Gold, and as Peter said, one of the largest undeveloped gold deposits in North America. As an initial introduction, I'd just like to thank the sponsors. I'd like to thank the Precious Metals Summit people for allowing this to all happen, and we'll move forward with our presentation on Moneta Gold. Moneta Gold is TSX listed. It's main board. It's based in Toronto. I do point out there are forward-looking statements in this presentation, in the speech I'm about to give. Our focus is gold. It's gold in the Timmins camp. Timmins is in Ontario, Canada. As mentioned, we are based in Toronto and listed on the main board. It's a Tier 1 location. It's a great jurisdiction. There's excellent infrastructure, very large skilled workforce, and a major gold mining centre. Our flagship project is the Tower Gold project. It's a combination of the Golden Highway and the Garrison areas. We consolidated the belt last year, and we're now moving forward with a large, gold development project. We just released a very favourable and robust PEA study. We updated the resource. We have a global resource, 12.8 million ounces, of which there are 4.5 million ounces indicated and 8.3 inferred. Consists of both high-grade bulk tonnage underground mining resources as well as large-scale open pit resources. Has size, it has location, and now we now have very robust economics to back that up. The PEA itself came out with a very favourable NPV at a 5% discount rate, $1,600 gold at a 0.78 exchange rate of 1.07 billion Canadian, a 32% IRR and a 2.6-year payback. Produces 261,000 ounces a year for the first 11 years. Throughput is 7 million ounces per annum, and we produced life of mine 4.6 million tonnes. Cash cost during that period is $811 per ounce, and all-in sustaining costs $1,004. We now have a 160,000 metre infill drill program underway. We've already completed 60,000 metres of that. We've put press releases out on guidance about 20,000 metres of that, and there'll be significant more guidance given in the coming weeks and months in regards to the infill and to some degree the expansion program. We're moving forward with our EIA study. We've finished 2 years of baseline, and we've already started our pre-feasibility works. Those are underway. Timmins itself produced over 85 million ounces over the last 100 years. It is Canada's most prolific gold mining camp. It occurs about 700 kilometres north of Toronto. Great infrastructure, roads, airport, major city there, and railway, and there's recently announced passenger trains are going to recommence service. We own 100% of our resources. All of the resources are on patented or leased claims. Means we own both the surface rights and the underlying mineral rights. 80% of the resources have no royalties, and 20% in the Garrison area have on average about a 1.5% NSR. We have just over 100 million shares outstanding. We're trading about $1.65, $1.70, market cap of about 170 million. We've got just under 15 million in cash. We have a very solid analyst coverage, some of the best, more experienced analysts on Bay Street, and we have some very good institutional owners, many of the large institutions in Canada and North America. We have a very strong management team. We've built this up significantly over the last year. We're now in a position to have the team able to bring this project into production. And we have a very strong and diverse board with a very diverse skill set. The project itself occurs 100 kilometres east of Timmins. It's on Highway 101, major regional highway. We're a major landholder in the camp. Our focus is the Tower Gold project. However, we do have other gold projects in and around Timmins, as well as some nickel and copper projects. However, our focus over these coming years will be on Tower Gold. We are looking to also monetize some of our other projects and move those forward. We also have a large, in addition to our 100% owned 27,000 hectare package, we also have a large 9,000 hectare joint venture with Agnico Eagle, which is currently on care and maintenance. We're moving forward with our ESG compliance. We'll have our inaugural 2022 ESG report out, but at the end of this year. We are moving ahead with our EIA. There's been no species at risk found. We've completed 2 years of baseline, no endangered habitats. We have exploration agreements with both the Abitibi and Assinipak, as well as the Wabun Tribal Council, and we have a pre-IBA with the former. We'll be on grid power. It is clean power. We'll have a low carbon footprint, and we'll be looking at wetlands preservation and as well as the development of ultramafic rocks in the mine sequence, which are carbon sinks and a great asset in our mine development plan. The tailings are non-acid generating and there's no deleterious elements, so it's a good, clean project, and we'll have a very low carbon footprint. This is a total of all the resources. We're 4.5 million ounces indicated. These total to the top, both open pit and underground, and we have 8.3 million ounces inferred. We've grown the resources significantly over the last 3 years, both through organically and through one acquisition of the Garrison project. We're now at 12.8 million ounces, and we're looking to continue to grow that as part of our infill and advancement of the program. These are the two major areas, Garrison, Golden Highway. They're separated by 4 kilometres. This shows the 2 large open pits in the Golden Highway area. This is the global resource that was recently published in September. We have underground resource significantly at Westaway and Southwest. These are the 2 that are developed in the mine plan. And the Garrison is the starter pit area. So this is historical mining there, and significantly in the 903 and Garcon areas where there has been historical mining, historical open pits, and a significantly lower strip ratio. We talked about the NPV, a 1.07 billion Canadian, 32% IRR, 2.6-year payback at $1,600 gold. Life of mine, we mine and process 166 million tonnes. It's a life of mine 3.1 strip ratio, hard rock strip ratio. We cash flow 1.9 billion life of mine and about 110 million per annum. Looking at some of the fundamentals behind those inputs, we have an all-in cost per tonne of about $32 a tonne. Life of mine, 192,000 ounces a year. Those first 6 years at 261,000. Peak production, year 6, of 368,000 ounces per year. Cash costs 811 those first 11 years and 1,004 all-in sustaining cost. This shows the actual mineable resources. It shows the 2 underground deposits which are mined, just over 1 million ounces there at Westaway and Southwest. Phase 1 is the blue areas. We mined at a grade of about 1.3 grams per tonne for the first 11 years. The underground operates for 12 years, and the mine itself actually operates for 24 years. The grey area is phase 2, so that's years 12 through to 24. Cash flow, 2.6-year payback. Peak investment, 520 million in the first year. We see those first 11 years of when the real money is made. We have looked at, and it is possible to do a mill expansion year 12, compete the production up, and we're currently looking at expanding the underground production as well beyond the 12 years. This will bring us more grade and, of course, more ounces beyond that year 11. Project extremely sensitive to gold price. We show significant upside, especially in these recent rises in the gold price and the lowering of the Canadian dollar. Significant upside there, and not a lot of downside. The project is not overly sensitive to capital costs or operating costs. The starter pits occur in the Garrison area. These are the 903 and Garcon areas. You can see the historical pits in the Garcon area there. The west pit, the east pit, about 10,000 ounces was produced there. Had a head grade of about 1.55 grams per tonne, 96.5% recovery. This is where we'll start. This is where we have lower strip, and we maintain for the first 5 years of production about 1.2 million ounces are produced from the Garrison area. While we're producing from here, we are paying for the development of the underground. We're paying off the mill, and we've paid for the pre-strip of the significantly larger Golden Highway deposits, which we begin mining in year 6. Golden Highway, you can see here the phase 1 in blue, phase 2 in grey. That's the 12 to 24 years. This is the area we have over nearly 1 million ounces in underground resources, diluted head grade of about 3.5 grams per tonne, long hole open stoping, average widths of 9 metres in those stopes. These produce good grade, get our head grade up, and produce about 100,000 ounces a year for 10 of those 12 years of mining. This shows the gold profile, the first 5 years through Garcon 903, John Paul and Garrison, pre-stripping, moving into the Golden Highway area, and then not only delivering ore from the stockpiles, but we overmine in the sense that we either stockpile ore or we're pre-stripping with our fleet. And then in the last years, we're mining only from the low-grade stockpile. Significant upside. We have a significant amount of historical core not sampled. We are sampling that now. It currently registers 0 grade and thus 0 ounces in the resource and within the pits. We'll be giving guidance on that with press releases coming out. We're drilling out areas within the pits which have not been drilled. Also currently 0 grade, 0 ounces. So look forward to those press releases. We're doing the infill drilling now, and as mentioned, we have another 100,000 to do by the end of next year when we look to update the resource. We also have a metallurgical optimization studies being done. We're doing hydrology work now as well as geotechnical work. We're also looking at the timing of the decline. Doing that early in Canada, you can fund it with flow-through funding, and it does not require the full EIA permit. You can get an advanced exploration permit. From a valuation viewpoint, we're trading under $8 an ounce, significant upside here for investors. Our P to P NAV is a 0.16. Historically, it's been traditionally in that 0.4 range, so significant upside again to potential investors. We show here our capital, initial capital versus production. We're right in line with all the other developing projects, especially noting the location we're at in such a key location and thus all the capital savings. And we are the largest, undeveloped project amongst our peers in North America. Significant size advantage there, as well as, of course, the location and jurisdiction. We've performed well over the last 2 years. However, we look to continue that going forward. We've still got considerable upside. We've added considerable value these last 2 years, and we're looking to continue to do that. The key milestones coming forward, the completion of that drill program, update of the resource, the upgrade of the resources and the potential expansions, improving of economics, lowering strip ratio, improving grade, improved metallurgical recovery, completing the EIA, getting that submitted with the completion of the PFS. We'll complete that, what they call a project description, submit that. We'll also be looking at our social license and gaining other our IBA agreements, as well as the consultation process, commencing permitting then it's the question of when we start that decline and move through to feasibility. So on that note, thank you.